SoFi stock has just released their latest earnings report, and it's another triple beat. Numbers look good. I was wrong on my predictions, which we're going to look at that in just a second. At the time of making this video, the stock is up between 1 to 4%. It's been quite volatile before the market opens, but of course we know that during the day, things can change quite fast. For those that don't know, SoFi stock is down 20% year to date. For those that did not watch my SoFi prediction video from a couple of years ago, I basically said this: Q1 new members to be 590,000 with a CAC of $296. Galileo Q1 revenues of above $100 million. Q1 net revenue of $565 million, adjusted EBITDA of $123 million, GAAP net income between 10 to 20 million, just like they guided, and EPS of 1 cent, just like they guided as well, then deposits over $3 billion. Now, if you already want to see all the other results, this is basically what SoFi delivered. Q2 new members, way above my own prediction, 622,000, and sales and marketing is actually down, so the CAC here drops to $270. Galileo Q2 revenue of $94 million, yes, it's up year over year, down quarter over quarter and below my own estimates. Q1 net revenue 591 million, adjusted EBITDA 144 million, then GAAP net income of $88 million, and so EPS here 2 cents, and deposits was at 3 billion. So yes, I was wrong, and I'm glad I was proven wrong because it's quite a positive thing. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with a couple of comments here from CEO Anthony Noto. Our first quarter was an exceptionally strong start to 2024, demonstrating significant momentum as we responsibly grow revenue and diversify towards our financial services and tech platform segments, sustain profitability, reinforce our balance sheet, and grow our member base. Tech platform segment revenue combined grew 54% and representing a record 42% of consolidated adjusted net revenue, offsetting flat lending segment revenue given a more conservative approach in a light macroeconomic uncertainty. They continue by saying here, at the same time, we further strengthened our balance sheet, growing tangible book value by $608 million, ending the quarter at $4.1 billion and $3.92 of tangible book value per share, up 16% sequentially. Now we're going to go over these results in just a second. I'm continuing here on his comments. So they executed 2 key transactions in the quarter, which we've discussed already. One, they issued $862.5 million of convertible notes due in 2029 at a 1.25% coupon to reduce the overall financing cost. Secondly, they exchanged $600 million principal of their convertible notes due 2026 for shares of SoFi common stock at a notable discount to par, which further strengthened their balance sheet for the long term. They say here it will have a minimal impact on a fully diluted earnings per share basis for 2025. With regards to deposits, that grew by a record $3 billion, up 16% during the first quarter, to $21.6 billion at quarter end, with over 90% of SoFi Money deposits, that's inclusive of checkings and savings and cash management accounts, coming from direct deposit members. They continue to benefit from continued strong cross-buy trends from this attractive member base into lending and other financial services products. They saw a year-over-year expansion in their net interest margin to 5.91% in the quarter. SoFi Bank generated $100 million of GAAP net income at a 21% margin in the first quarter of 2024 and an annualized return on tangible equity of 11.7%. With regards to the technology platform, revenue growth accelerated to 21% year over year, while contribution margins rose from 19% to 33% as their consistent product development and successful shift in sales strategy has enabled them to diversify growth and pursue larger, more durable revenue opportunities. In lending, was a record 82% of this segment adjusted net revenue was derived from net interest income compared to 76% last quarter and 62% same quarter last year. The percent of adjusted lending revenue from net interest income has more than doubled since the launch of SoFi Bank 2 years ago. Now going back to the tech platform, so revenue there was $94.4 million, an increase of 21% year over year and 13% last quarter, in line with their own guidance for accelerating growth, contribution profit of $30.7 million for the first quarter, increased 107% year over year for a margin of 33%. Now, like I said at the start of this video, this was a down quarter over quarter, but as you can see, contribution profit is actually better than last quarter. It's flat-ish, but despite total net revenue being down quarter over quarter, contribution profit is a bit higher. I mean, the biggest impact here is net interest income for this quarter was much lower than last quarter. But overall, I mean, year over year, we are seeing here a huge improvement. And I had to double check if they still include this line right here. And yes, it's still here. There is a robust pipeline of ongoing discussions with potential partners with large existing customer bases across both the United States and Latin America, spanning both the financial services and non-financial services segment. And so if we move to the presentation, so new members for the quarter, 622,000, bring the total to over 8 million members. That's up 44% year over year. As for Galileo account, now at 151 million, that's up 20% year over year. So we're clearly seeing here a huge reacceleration. As for quarterly adjusted net revenue, $581 million. Yes, it's down quarter over quarter. That was to be expected. And the same here with regards to adjusted EBITDA margin of 25%, also to be expected, but both of those beat their own guidance. And so moving on to Q2 non-GAAP guidance, they expect adjusted net revenue to come between $555 to $565 million, representing around 15% growth at the midpoint year over year. Adjusted EBITDA at around $120 million at the midpoint. Adjusted EBITDA margin at 21-22%. GAAP net income between $5 to $10 million. Now, with regards to full year 2024 guidance, they also raised that yet again. So financial services net revenue growth of more than 75% versus 2023 levels. Tech platform net revenue growth of 20% versus 2023 levels. Lending adjusted net revenue at 92 to 95% of 2023 levels. These are the numbers we are already known. Then GAAP net income of $165 to $175 million. They do say here that this includes a gain of $59 million on extinguishment of debt in the first quarter of 2024. Adjusted EBITDA for the year at around $595 million at the midpoint. GAAP diluted earnings per share, 8 to 9 cents. Tangible book value growth, 800 to $1 billion. And then total capital ratio of 16% at year end. The guidance assumes expenses under the EBITDA line to remain flat when compared to 2023 results, a 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as an adjusted EBITDA margin of 25% for full year 2024. Again, these are things we already knew. And so here you can see a better representation, the current 2024 guidance compared to the prior one. So a small improvement. We take what we can get. And so looking at the stock right now, we did not get the 18-20% jump like last time. Right now, we're up around 2.2% or so. Of course, there's still the earnings call. Plus, when the market opens, usually that's when the big jump happens. But right now, in my opinion, the most important part is that the business is doing well. Guidance is raised. They met their own guidance and then some. The stock will do what the stock will do in the short term. In the long term, as long as the business continues to grow, as long as management continues to execute, I do think that the stock will reflect that in the long run. So overall, another solid quarter, another solid performance by SoFi overall. It's getting quite boring to repeat the same sentences again and again and again, while not really seeing the stock react accordingly. But for long-term investors, I mean, isn't that the best recipe, right? You can add more and more shares of a company that has grown and has become better and better. That's just my opinion, of course. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.